Hello, welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Steve Reiss. Steve is a certified public accountant and certified valuation analyst.
Right.
And he has been doing business valuations for 15 years. And today we're going to be talking about the role of the business valuation specialist. Steve has had the National Association of Certified Valuation Analysts CVA credential for 9 years as a certified valuation analyst, and he's currently associated with the San Jose CPA firm Berger Lewis and Company. And Berger Lewis and Company. That's when I worked with him years ago. Now it's Berger Lewis Accountancy Corporation.
Right.
Okay. Anyway. So welcome, Steve. Thank you very much for being with me today and sharing a little bit of information about this important area. As a certified public accountant myself in tax practice, I've seen this whole business valuation area just blossom out.
Right. Yes, it has.
The use of a qualified appraiser is required in the tax law in some cases and by the courts and even for financial reporting these days. So, with that, first couple of questions. What is a qualified appraiser, and would you comment on the new requirements related to?
Right. Well, a qualified appraiser is defined pretty much by the Internal Revenue Code as someone who has the educational background, the experience in doing valuation work, and has a professional credential. Okay. So the problem has been in the past that people were doing valuations who were, quote, not qualified, and their clients were not well served. Yes. Because the IRS has their own qualified people, and therefore as the code zeroed in on getting better and more consistent, as standardized, and you might say, reports, they want to have a qualified appraiser. And my opinion is that it raises the standard of the industry by having that requirement.
Yes. And so you were talking about the situation of dealing with IRS. So really, like when you get in litigation, it's like the taxpayers' appraisers and the IRS's appraisers, and ours and theirs.
Yeah, the tax court, the judges in the tax court have been quoted as saying, "Tell me something, educate me, don't just use generalizations." And so the tax court is one area, but a business appraiser needs to be able to, well, if he has a broad practice, there are stock options that have to be valued for privately held companies. There are businesses that have to be valued for the purpose of mergers and acquisitions, as well as the IRS practice, which is for estates, trusts, gifts. And when you sign that one of those returns as an appraiser, you're certifying that it meets a fair market value standard, which is another subject altogether within the concept of business appraisal.
Right. So really you sort of touched on my next question to some degree, is the areas for which valuation studies are used. So you said estate tax returns, gift tax returns, estate planning. This is one that's been a little bit controversial because you know, sometimes you're working sort of informally with numbers, and the AICPA, American Institute of Certified Public Accountants, has been saying, well, we'd like you to have a little more assurance related to the numbers that you're working with for that estate plan. Anyway, a little bit of a question mark there. Big one though, disputes between partners.
Yes. That could be a business partner. It could also be within a divorce. You have a property that's generating money, profit, income, and somebody says, well, what is it worth? because I own half of it or some part of it, and the concept of determining the nature of the business, the risk associated with the business, the potential competition out there, which would affect the income stream in the future. All of those things have to be taken into consideration in order to get to a value. And on top of that, there are three different approaches that are used in evaluation, so you have to kind of touch base on all three of them and deal with them, or at least mention them to let someone who's reading the report know that you have considered all of the options.
Yeah, so at least this is complete, but you know, what is appropriate for this particular purpose,
yes,
and this particular business.
Absolutely.
So for example, if you were dealing with real estate, okay, then maybe an asset-based approach might be appropriate, whereas if you're dealing with a business that's buying or selling software, or particularly selling software, then another approach might be more appropriate.
Yes, exactly right. The asset approach, the present value of future cash flow, and a liquidation approach. So those are three that would come to mind right off the top of my head.
Now, another area that's recently been coming out, actually I remember them talking about this when I was studying accounting years ago, but now it's actually sort of coming to the forefront, and that is fair value and financial reporting. And so I wonder if you could comment about that for just a moment.
Well, fair value sounds like fair market value, but it's not.
Okay.
Fair market value has been defined by the courts through a revenue ruling 59-60. There are 8 particular points involved in establishing fair market value. Fair value is a concept where you have to think about what a potential buyer or potential seller would value the asset at in terms of a transactional basis rather than strict rules of covering certain points. And fair value becomes a little bit more subjective than fair market value, although they're both subjective, unfortunately.
Yeah. And part of what we're dealing here, though, is that in the past, a principle, a foundation of financial reporting is to have objective information based on money changing hands.
Yep.
Okay, and now what's happening is that there is an evaluation that's supposed to go on related to certain items on the company's financial statements, particularly their balance sheet,
yes,
each year to evaluate whether the value that's presented on the balance sheet fairly presents the financial position. And that involves things like intellectual property, patents, trade secrets, and so forth. Yeah. So